Hey investors, Bradley here from Watson Estates, and thanks for joining us. And I'm so excited for today. We're going to go through some of the stats for June 2020. You guys know this year has been an absolute roller coaster ride, and so we're tracking on a month-by-month basis. In fact, daily, if you follow us on Toronto's #1 real estate podcast, we are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate, and we have a lot of fun over there. But I love when these stats come out, and I absolutely love putting out videos to share some of the highlights. And this month, I don't know if you guys remember that old application on Facebook, the hot or not feature. I know that used to be a really popular thing. So I want to talk about what's hot, what's not, and what I am tracking most closely as this month progresses here in the GTA. Make sure you guys hit that subscribe button or like us if you haven't already. And let's jump right into it. So let's start off looking at housing in general. So we're not going to the GTA today. We'll save that for a future video. We're talking just in Toronto, which many people would say has been hardest hit here in the GTA due to COVID. So let's see what's been going on. When we look, we actually saw, you guys will remember that May was actually a pretty good month. We were doing pretty good. We saw giant jumps from what we saw back in March into April. And this June, this past month, is much of the same. We saw significant improvements. Yearly, we're up now 14%, which is comparing with June. Now, historically, June's not as impressive as May because we're dealing with an old summer market. And the stats, what's more surprising is that when you look at quarterly change and monthly change, it tells us that we are currently in the spring market. Although the weather is hot outside, and sometimes you don't want to drive because it could damage your vehicle, as my father-in-law has been recently telling me, you got to be careful. But it doesn't matter. When it comes to real estate, we are in the spring right now. So let's look beyond that. There's been price increases overall. It doesn't tell the same story when we dive into each particular segment. So what's hot and what's not? Well, let's start with detached. Some of the main highlights that I pull out of this article, and all the data that I'm pulling here is from Zoocast. I actually put this video together before Treb released their stats, and we'll go through that through our daily podcast as well this week. You can check out. But I wanted to get an early scoop on it to get you guys the first take on what's been going on. So 6 bedrooms, the 6-bedroom detached, so in other words, the big ones, they saw the largest increase of 90%, which shows that luxury real estate is climbing, but they still haven't reached their March 2020 highs. So they saw quite significant increases in activity and quite significant increases in price, and it's all because they are the one housing segment within detached that haven't reached those highs that we saw back in March. The next largest growth was in the 4 and 5 bedroom units, so as we kind of go down, and they were 22% and 24% respectively, which did knock out their 2020 highs. And in fact, other than 6 bedrooms, all of them have. All detached homes are higher than they were in March, which is impressive. More impressive even than a year-over-year increase, in my opinion. The average detached is actually up. For those of you who said to wait and don't buy, it's too scary. $200,000 from just 3 months ago. What an investment. Investing in a time when the market is down, once again, proves itself to be the most valuable for the people who take that jump. Now, year-over-year, day on market have actually gone down in the detached from between 18 to 60%. Significant drops across all sizes in the detached. And this is a very parallel story to what we're seeing across the GTA. And it's telling us that we are going to see price increases in this segment. The number of sold listings saw no change. The new listings dropped 12% and active listings dropped 35%. So although sales aren't changing much, listings are coming down, which is putting pressure on months of inventory from a very simple calculation to realize that's going down, months of inventory. And as that happens, that is a leading indicator of price appreciation, and multiple offers are all around us in the neighborhood of 100.41% are being offered of the asking price on average. So the average is over asking now, once again, here in Toronto. So let's jump into townhomes. And now I know they break it by detached townhomes and condos. I know there's condo townhomes, which would fall, in my opinion, under condos, and detached and semis would fall under detached. So the semis and the detached look like what we just saw. Now let's look at the townhomes. Average price is up for most, for 1 bedrooms and 4 bedrooms. They're up 21% and 22% respectively. So we have this interesting thing where we see the small stuff and the really large stuff is up as far as average price. However, 1 bedroom units are the only ones that haven't caught up to their March 2020 highs. All the rest have. In fact, they're selling 13% year over year up. So townhomes are doing pretty good. The only ones who haven't recuperated their loss from since March are the one bedrooms. Now, sold listings and new listings are both flat for townhomes, sitting between plus 1% and minus 1%, which indicates that there isn't much climbing or declining. So townhomes are kind of boring right now when we look at the numbers. However, active listings are down 16%, which means a tighter supply from last year. Why I'm not so interested in that is because, again, we're comparing a new spring market to last summer's market. So naturally, you're going to see an uptick in the activity this year. So I wouldn't pay too much attention to that. When we look at the average sale to list price, it's over 105%. So again, a good indication that townhomes are doing quite good. Not as good as a detached, but doing pretty good nonetheless. And you're going to expect quite a bit of bidding wars over the next month. All right, you ready for the not so hot? We're going to go into condos, guys. And they have evidently been the hardest hit for 2020 with what, as we saw early on in the pandemic, a 10.5% drop because of COVID. Well, how are they doing now? Well, condos are up when we look year over year by 7%. However, that's not based on March highs. When we look at 3-bedroom condos, they climbed to their March 2020. They're the only ones that did that. The other units, the bachelors, the 1-bedrooms and the 2-bedrooms, they have not yet found themselves back to where they were at ground zero. So although you hear you're up 7% in the media, doesn't mean that they're actually up. They're still down if we compare it to the highs they had a couple months back, and are up a whopping, this is the 3 bedrooms, 25%. So how interesting is that? Even condos don't paint the same picture. The larger units are doing still pretty good. It's the small stuff, the ones that are a dime a dozen, that are really struggling and fighting back for that value they once had. The rest of them, they're floating between 5 to 7% year over year. So before I move into what I'm watching through this year, I want to highlight a big red flag, okay? When we look at condos, that is, this is a warning sign to anyone in the condo space, anyone that's kind of checking that out. This is what's most interesting about what we saw this past month. Average active listings are up, so listings are up 15%. New listings are up 64%. Okay, which wouldn't be a big deal if sales were increasing. However, sales, the number of listings sold, is down 9%. So if there's a place we see a disconnect between number of sales and the number of new listings versus the number of sales versus listings, it's in this space. And this tells me prices are on their way down and months of inventory will be on their way up. So studios, 1 and 2 bedroom units are at the highest risk right now in our marketplace. In fact, studios are down 38% with similar number of listings from last year. So sales dropped big time. 1 bedroom saw a 76% increase in listings, right? A 38% increase in active and a 6% drop in sold. So for very different reasons, they're both at risk. 2 bedroom listings are up 57%, but sold down 13%. Not a very good picture. 3 bedrooms actually did quite well, as mentioned. Active listings are down 26, although number of sales and new listings are steady from last year. So that is your warning sign. That is your leading indicator of what your July will look like. So here's what I'm watching for this month, and here's what I'm expecting. I expect from these numbers that we just kind of ran through, a strong July for detached towns, detached including semis, and 3-bedroom condos. Right? In the short term, we're going to see average days on market continue to go down, which is a new trend, not something we've seen since the beginning of the pandemic. And specifically, if you're looking for a short-term buying opportunity, I would say it falls in the $2.5 to $3 million price point for detached homes. The reason is they are the only ones that haven't caught back up to their highs in March. So if you've got a little bit of money, namely to buy $3 million units, this is a good chance to get a discount, which I anticipate based on a very rapidly declining months of inventory will catch up to their highs very soon. Now, when it comes to condos, obviously you've heard in my voice that we have a weak month ahead of us. If you have a small condo, a studio, 1 bedroom, 2 bedroom, and I expect that the months of inventory will continue to go up, therefore putting downward pressure on price. And this isn't where the story ends. Because when we've looked at what some people have said is going to happen in our market, specifically Reuters did a poll and they found that the people think the price in our market in 2020 will be up 3% and in 2021 will be down 3%. Well, why does that matter? Well, we're up 14% right now. So if we're going to see an only up 3% by the end of this year, that means a pretty significant drop this year, and obviously a further 3% drop into next year. Also comparing against this year, which they're saying will be bad, which would be even worse. So there's a lot of concern as we enter Q4 on what our market will look like. So the optimism and excitement of getting good deals that we've had over the last couple months, at least here at Watson Estates, is not so exciting right now. Just be a little more careful. If you're going to invest in a property, regardless of what it is, make sure it's a long-term investment. And absolutely, people are changing what they're interested in the short term, looking for a backyard in exchange for that little pie in the sky that was the dream not that long ago. Some of the big things to pay attention to: mortgage deferrals are coming due. CERB, there's a talk of transitioning CERB and what that will look like between the various political parties. And of course, evictions eventually will come back online, which could mean an influx further to these condo segments, which are already getting a bit of a hard hit. If we experience significant price declines in our market, it will be in the lower end, I think, is where you're going to get hit first. And ultimately, that's kind of what we're watching right now. That's the update we have for June 2020. What did we miss? There's so many things going on, which I definitely can't cover. And we do on a daily basis. If you're not already following our daily podcast, I know you don't see my face, but you don't want to see my face bright and early in the morning. But it is wonderful content, the best in my opinion, which has put us #1 on iTunes, Spotify, and Google Podcasts. Hit the subscribe, and I'll see you guys next time with more. Take care and keep it real.